Hello, everyone, and welcome to this new edition of GM Web3 dedicated to the MultiversX ecosystem. Like almost every Wednesday in the morning, we are live on X, but also on Twitch. And you can find the replay today at 6 on our YouTube channel. So, first of all, it's very important for us. You can support us by subscribing, liking, commenting, sharing the video as much as possible. But you can also support us financially by sending us tips in EGLD or any other cryptocurrency. You can find all the wallets in description of the video. Before we start my today's interview with Robert Sasu, core developer of MultiversX, to speak about the new MultiversX economic upgrade proposal, the new EGLD tokenomics. We'll speak about it. We'll try to figure out everything because the goal of this interview is not to debate with Robert. It's not my role in GM Web3. I've said what I think about the proposal on X several times. The goal of this interview is actually to make sure everybody understand everything about the proposal, to make things clear, to ask the question that everybody's asking themselves. And after that, well, maybe things can change. We'll see with Robert. But most of all, the most important is you can vote the way you want, because there will be a governance vote. And there, if you agree with the path that is taken by the foundation, you can stay and enjoy. And if you don't like it, it's like democracy, you can leave the project. But at least you will not have any regret from not understanding what is happening. This is the way I will try to host this interview, no more, no less. But first, before I receive my guest, I would like to thank the sponsor of this show. It's EAPS. I know you know EAPS on MultiversX. It's one of the oldest and the biggest NFT collection and community on MultiversX. I've been there since the beginning, and I've wore this uh, profile picture on my socials for months, even for years, I think. And they have always been there for GM Web3 and for me when I was doing charity, when I wanted to chill my NFT. And they're still here building. I received the CEO Crypto Mercy on my show last week. You can find the replay of the interview on the YouTube channel. And yeah, a few weeks ago, they launched an extension of the collection on Solana to explore a new ecosystem. So if you like the art, if you like the project, which is like a playable island on which you can own, play, and earn with your mates, with your EAPS mates, feel free to join their socials on Discord, on X, of course. And yeah, if this is something that you like, feel free to grab one. Of course, it's not a financial advice, but yeah, it's a very nice and very cool community. And I am still a holder of many EAPs, waiting for the island and the 3D version of them to be released. And thank you very much again. So this interview will be in two parts. So first of all, I will receive Robert, and I will talk with him about the proposal, about yeah, everything I want to know more. And at the end of the show, there will be like an AMA, so you'll be able to ask your question in the comment. So feel free to ask your question in the comment during the live. I will take the best ones and I'll ask directly to Robert at the end. So stop waiting and let's invite my guest of today. But looks like there is a webcam problem. Let's see, but I can't see you. Um, oh, oh. Okay, okay, okay. You left, so that's why. Hello, Robert. How are
Hey,
you?
hey, no, I didn't left. It was just I was setting up the camera and then it switched to my
Okay.
I don't know
How
why.
are you?
Pretty tired, but this is it. Let's do it. I am pretty excited how this process is ongoing with all the things. I just like that there is a bunch of discussions happening in all around, and then I think in 1 week everybody can learn more economics than in a school for 4 years. So it's everyone has the chance to actually learning economics in a short period of time.
Even you guys, I think you learned a lot from this sequence for MultiversX, because you are developers. Actually, you're not economics. So I think you too, these 2 last years, learned a lot about the all the mechanisms, about what has been done on other ecosystem, other blockchain, and so on. I think you benchmarked many models and so on.
Yeah, that's true. And then with all the discussions which were happening in the US and with some of the US partners, we have discussed a lot on the economics and how the US sees economics and how they look to what are the, let's say, the KPIs they are looking on a chain and everything around it. So it is not just us thinking, but it is a co-work and a review with others and getting into a lot of debates around things which could work, which can't work, even with all the risks which are there.
So, which what kind of partners are you talking about? I mean, one of the questions before we deep dive into the proposal, one of the question I had in the comments of the post was about how did you create this proposal. You're talking about partners there, but yeah, have you challenged, have you talked with advisors, economists, I don't know, VCs, I don't know. So can you tell us how the thinking process happened uh, since at least February? Because if we take back some context, you left to the USA like 1 year ago, we can say, and on February, so you as far as I saw on X, it was about 1 year ago that you left to the
I
USA.
think the guy started after Trump was elected, so not yet 1 year. I don't know when was the first time,
So,
but
so
again, I think it was this year, February maybe.
as far as I remember, Trump was elected on November. So
Yeah,
yes,
so maybe.
but the brand was in the USA on July. So you thought about the USA before. Anyway, on February, Benjamin made a post on X, and part of it was the 11th post, was about the major economic upgrade that would happen in 2025. And the 12th post was about the war chest, was about the funding round. And later on, Lucian talked about 500 million of dollars. So all of these information are important because the community, you know, the community, I know the community. When like digits or when dates are written, of course they want them to be real. So yes, my first question is about the thinking process. Can you reveal, can you tell us with whom or what kind of person have you thought this proposal?
So all last year long, we with BD and we personally as well had a bunch of discussions, especially in South Asia and in the US, around, let's say, a few things. We wanted to understand what are market makers looking at, what are liquidity providers are looking at, what are VCs are looking at when they choose a blockchain to invest. And then a lot of them were looking into KPIs like Solana has on the chain. We all know a bunch of things, or may know a bunch of things of whatever is happening on Solana, but this is just an example. And then they were looking a lot on revenue, on capital injection, and on growth. So these are some of the, let's say, some of the most important things for them. And again, for every kind of discussion, it was that they invest in environments where they see potential for growth, and then you have to show a potential for growth. Potential of growth is not APRs. Potential of growth is growing revenue massively upwards. So that's what they are looking in, because if you have a growing revenue, as in every startup world, if you have growing revenue, you have a growing share price, which people are betting on when they invest into a startup or not. So for a lot of
Are we,
years, let's
are we,
say, you
are
were
we
blind, we were blinded about this, and
Yeah,
then
just sorry to inter. Are we talking about equity investment? Because you speak about revenue, you speak about share investment. Are you talking about equity? I mean, like some investors, some VCs are interested in investing on MultiversX, the company, the lab, or are you talking about investing in the token and the
yeah,
right
so I'm
value?
speaking right now about investing in the token, like how they, liquidity providers, market makers, VCs in general, they see investing in tokens. And they are, for example, last year they were looking into investing on those tokens which generate revenue. And even this year, you see Hyperliquid, Aster, Binance Smart Chain, Tron. Those are some of the, let's say, even alongside Solana, those are the things which are super hyped up by the investors, and we see money moving into those directions because those are the products which are generating a lot of revenue.
But like, okay, if you speak about Aster, if you speak about Hyperliquid, if you speak about Pump Fund, it's fine. It's not blockchains. Okay, it's protocol. Okay, it's Dex, Sex, it's Perp Dex, and so on. So there is revenue, and so people wants to invest because there are big buyback mechanisms and so on. But when you speak about BNB, Solana, Near, all of these blockchain that are attracting investors, is it really about their revenue?
It is about a few KPIs like total value locked, volumes, and revenue generated on the chain are one of the most important things. So they invest in Solana because they see that pump of that fund and the other protocols are creating revenue, because that means that the chain is lively, and that means that uh, interesting projects which are interesting projects can be built there, which are driving the price up of the token. That's
So
how they are looking. So in you have, that's how they look into the assets. So they look for scarcity in Bitcoin, but they look for utility on every other thing.
okay, so let's be maybe more precise. It's not about the blockchain revenue, it's about the revenue of the dApps on the blockchain. So it's indirect revenue. So the issue of MultiversX, is it the revenue from the blockchain? So it can be fees, it can be other kind of revenue, or is it about the lack of project on MultiversX that are creating, that are generating fees and so revenue?
So in case of you want to say that okay, your token is a utility, it is a utility only if there are applications which are generating revenue on top of your chain, and that is we cannot hide behind like anything else. This is like a given reality you have to live through. Otherwise, you cannot say that okay, it is utility if there is no revenue generating applications on the chain. And for revenue generating, you have to have a lot of things. And again, it has a secondary effect that, let's say, the protocol will generate revenue as well. Even if you look, for example, in Solana, technically deep dive when you look at the inflation rate, how many tokens are issued out or stuff like that. The protocol per se doesn't burn more tokens than what they are minting, but they are a bunch of applications which generate revenue on the chain, and some of those applications are buying back heavily Solana, and that's why it is looked with a really good eyes from an investment perspective. And you can say the same for, let's say, Tron, BNB,
Mhm.
and Hyperliquid. Again, even if some of them are centralized or not,
Yeah,
but
I
not
mean,
right now. We are speaking about
hyper.
economics.
I think it's a bit twisty to compare Hyperliquid and BNB chain, for example. So that's why I wanted you to precise. But thank you for this. So what is the balance between the balance of power between VCs? Like institutional investors, market maker, and the interest of the community and the essence of the project. I mean, when you're looking to raise fund, there is a power of balance. Okay, so either they want to invest or you want them to invest. So during this year in the USA, what has been the power of balance, and what kind of compromise you had to do to make them interest on MultiversX? How did you guys deal with this?
On the compromises, I don't know. I am keep coding a lot
I
in
mean,
general.
when I say you know what I am talking about. I mean, in writing this proposal, for example, to comply with what they want, comparing to what the community or the essence of the initial project Elrond, the max supply. Will deep dive just later.
Okay. So the let's say if you want to call it compromise, creating an economics for growth, it's one of those things. Creating buckets in which they can invest, because right now, so if you go to the US, and those are big money, not like Europe with 5 to 7, 10 million dollars investments, though you are talking about much higher. For even for the DAT, for the ETF, you have a higher starting bracket from what you want. And those amount of tokens are not available right now in the market, and they are not available right now in the, let's say, in any sense,
In the
because
position,
it's not like they go into Binance and they buy all the way up.
yeah,
Like a deal
of
is
course.
made, okay, we buy this amount of tokens with this price. Even let's say if it $40 or $50 at price, if you want to buy uh, buy tokens for 50 million USD, who is going to sell you 3 million tokens? Like, there is no such a way to do it. There is no such a market in which you do that. That's a reality. So what they so for all of those things, you have to create, um, that is, let's say, a compromise. You create those buckets in order for people to be able to come in. If we look at other protocols, they did the same, but they did it early on, some of them like Solana, or some of them did it later on, like Avalanche and Polygon, when they did their changes of the token and economics. They made new buckets for the new investors to come. So, and even I think, I have to recheck for near whether they did it or as well in their token economics, how the distribution and how those buckets were created. If I have to make, let's say, one big mistake we made, is that in the period of the last bull market, we didn't do this kind of raise at that moment. So that was because when the price would have been going up, and you get some of the big guys with, which, let's say, alongside the VC, you get a liquidity provider as well in terms of Web3. Then you have an incredible DeFi on the chain. Why do I say incredible DeFi? Because you can have all the technology, but if the liquidity pools are not are not big enough, all the swaps have a spread fee of a pretty bigger cost, and then everybody is, let's say, complaining that the fees are big. Yeah, the fees are big because the liquidity is small.
Okay. So you've been in the USA for 1 year now, a bit less anyway. We haven't seen since any positive signal, any major partnership, except maybe Sui and X Money, but it's not the topic today. It could take 1 hour, and now it's voted.
And I
So
don't know, and I don't have enough information on that.
and
So
it's not the topic today. But anyway, we haven't seen any buying pressure. I mean, yesterday I saw, in 1 year the EGLD is decreasing like uh, uh, two times. I mean, it was 26 and it's 28, and Bitcoin is two times more. So we haven't seen any like important announcement, any new builders coming to the chain. Anyway, that's the situation. And now you announce a new economic model for EGLD. So would you say so far, move to the USA has been a failure actually, and the only way to survive is to print new coins? Sorry to be tough, but this is the way part of the community is seeing this. So I give you the opportunity to explain. What do you think about this kind of thinking?
So in the US, I don't see it as a failure at all, because a lot of partnerships and a lot of discussions have been, let's say, done. And then they are waiting for, let's say, the final confirmations, which has to go through governance code and everything as it is described in the document in order to unlock some of those things. So in the US, you have to build a presence, you have to go there and discuss with people, learn about the environment and get a lot of feedback, and get those important people in which matter. And then you have to, let's say, select the place for the offices, and then you go to different places. That's what they did on the last trip, Lucian and Benjamin, and that was great. So I don't see that as a failure, because it is a preparatory work which you have to do. It is the same preparatory work, let's say, you have to do for 1 year before announcing a private and a public sale. You have to go and do the deals and do all the discussions and everything. And in the end, you get to the part of the signings and something like that, and then you have to deliver on KPIs before getting the signing. That's, let's say, what's happened before in the Elrond time, where we had a bunch of discussions before the private and public round was announced. We've been coding a lot, 1 years of discussions, and then out of those discussions we had some KPIs to met, and when the KPIs were met, then the guys got in. So it is a process which you have to do, and it's at least a 1 year process. So I don't see that as the failure. And on the second point, we are not dying. So in the Foundry session last Thursday, and after that, Benjamin, or I think the MultiversX main account, launched a, a long, long Twitter thread, and it says that the foundation to develop the protocol, we have a 10-year leave, a 10-year, 10 years more of building at the current burn rate, which, by the way, our burn rate is like at least 10 times smaller than any kind of competing chain, uh, looking at the public data, uh, which has to come out from us as well in a form. But again, this governance proposal and the economics, as you see, there are a lot of things added in order for us to be fully transparent. So, and once that is, let's say, signed, then it's an obligation to be fully transparent. So no, we are not dying, but when we, let's say, look and ask our amazing builders what they want more stables, more liquidity, more volumes, more grants to build bigger things. That's what they want. So the ecosystem to get in the next level, to get into the growth phase, that's why the economics have to be changed.
So what I understand there is this change of economic model is essential, unavoidable for validating these deals that you're talking about and that you've been preparing for 1 year. So doesn't that make the vote and the current discussion with the community biased, because it's either that or death? And this is a comment that I have right now from Aline Sushu, which is almost the same idea. So what happens for some reasons, I think it will not happen. But anyway, if the voting for the new tokenomics fail, what will happen with the future of the MVX? So this is a question that is asked a lot.
Resurfaced. As we said, the foundation has enough to develop the protocol continuously, and then we can play the game like, okay, builders will come with smaller grants, with smaller liquidity injection, and we work with the current, let's say, economics constraints, uh, and try to build the tech, try to build some applications and move the dent here and there. Like literally, we've been doing that for the last 7 to 8 years, coding and trying out new stuff. We will probably try to launch even more applications with the builders we have, helping them. Even right now, there are countless of applications which are built with, let's say, Project X and the others. I see a bunch of those things which could take, let's say, to make the chain lively. But if we want to to play in the big game, big league, then we do that. If let's say the governance code fails and those things fails, then we don't have DAT, we don't have ETF at the current moment, we don't have the US Labs LLC funding, uh, and maybe still US labs and stuff happens because somebody takes it up without a big funding round, but you are living then a little bit, let's say, differently in that sense. So in no, we are not dying, but if we want to, let's say, big play in the big league, then it is this is the economics.
Okay. And what is that? So yeah, the no plan B. I mean, it's
I said the plan B. We remain, we build, we
yes,
create, we help the
very clear.
builders we have right now. Growth games are on. Everybody can come up. Launch pads can be still made. It can create.
And so, what are the scope for maneuver with the proposal? Sincerely, is it possible to change it in a way, or actually it's just a facade of governance because everything is already deal in the backstage? That's also a question I'm asking.
No, there is no everything deal in the backstage. It's mathematical models which are giving these things. And as you've seen, we put first a number for the, let's say, one of the most discussed things, the tail inflation. And then everybody asked that we have to curve the tail inflation. We are working on the curving model. Actually, we tried to validate that with economics professors from the US just to be sure that we are in the right direction. Also, we have added a tons of thing in the document. Today, I think I will hope I can add, I can show where we adjusted things according to what the community wanted. For example, they wanted that the base fee of 90% to builders and 10% is burned. One was to be changed into more burning as the years goes on. That can be added. Some others suggested whether not to use this only as so to be used only as relate transactions, so just on-chain, let's say on-chain transaction credits to use like that, like you use your Amazon credits. Maybe that can be added. I didn't formulate those things. Also, we added for a bunch of other things where, let's say, the community said they are not sure what this mean. We added. I've seen a lot of comments around that we should start maybe with a lower inflation. That is still in discussion. So no, all the things can be changed if they are argumented. So the arguments has to come, okay, I want to change this. It has to come objectively with a model, not only from an emotional standpoint, but from my perspective, it was amazing to see so many objective arguments, even on Agora, even on Twitter. Uh, this is a win when everybody wants to add a little bit of and starts to work together on this.
Okay. So if we um, go to the proposal itself, so you are asking the community to pivot from scarcity to issuance and incentives to restart growth. So, in plain terms, what is the testable thesis behind this, and which metrics over the next 6, 9, maybe more months would tell to keep going or to dial back?
So scarcity without growth doesn't mean a thing. So let's say you mentioned that Bitcoin growth for like 4 times in the last year. We have to see how much that is actually coming from two things, which is digital asset treasuries and the ETFs. Those are the main points of investment in the Bitcoin. And what they do more is that they reduce the liquidity from checks, from liquidity from the market. So any kind of buy and yes, any kind of sell, the spikes are bigger. But again, when you have a constant buying pressure from DATs and ETFs, even the spikes this year were, let's say, much lower than before the ETF season. Like, have you seen this kind of Bitcoin to not fall 30% in one day? 4 years ago, it were like those crazy days. And then because there was no DAT and there was no ETF. So there is an external buying pressure which is coming inside. So how do we measure these things and how do we want to make sure things are in place? Let's say a few KPIs, staking ratio to grow. Right now we are around 50%, let's say to grow to around 70%. And if we saw a quarterly growth of staking ratio, it means that people are buying more and staking more EGLD, which is good for everybody who holds EGLD. Then another KPI is protocol revenue via burns. So we have right now 10% of the fees are burned. This is a measurable thing directly on the chain, so shown by the explorer. We can see whether the burn is growing quarter to quarter. And we can put, okay, at least 10% has to grow every year, the amount of burn it happens on the chain. Uh, third third KPI, which I think everybody, let's say, loves it, it would be the price growth of EGLD versus USD in terms of, let's say, every month, and then you measure it. And that's a KPI. And let's say the third one, uh, we are like a general purpose blockchain, but blockchain has the best product market fit in DeFi because blockchain is a ledger, blockchain is money. You can execute a bunch of things, financial activities, which give value back to all holders. So DeFi activity would be, let's say, the fourth KPI, which is TVL, volumes, velocity, and also stable coins. All of those has to grow step by step. These are, let's say, four become, but again, if the community wants to say, okay, man, maybe we should measure something else, let's give your reasons. This is what we objectively want to measure, and let's measure it. And the thing is that there are a few things. We have the bucket for the distribution. The buckets can be, not can be, will be reevaluated by governance every year. So KPIs to be reported, and then a new governance to on the distribution, especially to be discussed for any kind of distribution. Those might mean that you do not distribute 100% of the tokens because you say that, okay, one of the buckets is not needed anymore. Why not? So those are things which can be done. And again, it will be a constant measure, discuss, vote, measure, discuss, vote, measure, discuss, vote, measure, discuss, vote.
Okay. Inflation and demand are like, chicken and egg. Intuitively, we would like demand to create inflation, but here is the opposite. So it reminds us the monetary policies that you criticize every day on X. So what's your demand first plan so we don't end up with dilution without traction? That's the crucial question with the inflation in cryptocurrency and in currency world.
Yeah, in the currency world, yeah, I let's say I was blindfolded a lot on the Bitcoin model, and then I thought for a long time that okay, we build the technology and the builders will come. But when there is a competition, builders need incentives as well, not just the best technology. Even with the best technology, right now, even in AI, you go to some, like you as a startup, you go to an AI which gives you the most credits for free. And even you do this in the cloud computing and all kinds of things. I'm not saying that free credits are the way to go, but I'm just saying out the reality when there is competition and even when you have the best tech, that happens. So you need capital injection into builders and into growth in this sense. And you need buckets from which you can give these out, and then these buckets can be stopped and um, and the funds do not have to go into the market if the KPIs are not met. So that's how demand-driven, let's say, emission model works. You have just for example, for the ecosystem growth fund, which is for builders, you have 20% of that right now, as it is in the document. It goes into a DAO. The DAO is run by multiple members, not the foundation. Multiple members are part of it. And then you get a bunch of builders who apply for grants. Let's call it grants. You don't give for somebody $1 million and they can do whatever they want. No. You set up, let's say, for $1 million, you set up even 12 milestones. And they have the funds are released in a vested form only if those milestones are met. And what are the most important milestones? For example, in case of an ecosystem growth fund, for the protocol is user adoption, like monthly active users and new wallets creation, on-chain activity, real on-chain activity, economic impact, which is TVL and revenue generated, and the growth of the community in general. So these are, let's say, four measurable points you can add. Then you start to and you start to act upon these things. And if there are not enough builders, then you don't make those emissions. Those emissions stay locked in contracts. They don't touch the market. There is no dilution on them.
Okay. Last question about the inflation. So inflation is only useful if usage actually increase. That's the objective of this upgrade. So what if demand does not accelerate? How can long-term dilution be avoided? Do you have, I mean, like clear thresholds or cutoff mechanisms so that automatically it will maybe reduce the emission or maybe stop the inflation? Have you thought about this kind of scenario?
Yes, definitely. So, with the measurable KPIs, you can measure how much of the inflation can be, let's say, eaten up by demand. So, for how much inflation you have demand. And then, for example, if there is no demand for the growth dividend on the DeFi, so you don't see USDT or stable coins liquidity coming into the chain, you don't see volumes going up, then those funds are not emitted. So 20% of the emission is just blocked, simply like that. If you have the same for the ecosystem growth, if there are no relevant projects which are building applications which bring revenue onto the chain, then you stop and you are not giving out those funds. Again, 20% more blocked in this sense. Uh,
So the
and
sorry to interrupt. So the 9.47% is if all the buckets deserves the inflation, let's say.
exactly. Yes, exactly. If all of them deserve the inflation, and then for each of those things, you have separate KPIs which you measure. On top of it, uh, the 9.47 goes down towards 2% in a rapid way if there is no demand, and it goes down in a slower way if there is demand. So you measure a growth, and according to the growth and the formula, you just create a, a decay range from the initial phase to the next phase, which decay rate is really fast if there is no growth, and it slows down if there is growth. So answer technically in your case, let's say like if there is no demand for DeFi growth and ecosystem growth, it is not even 9.47%,
So
but
what
you
will be
make
the
minus.
minimum? What will be the minimum inflation that will happen in any case?
That will depend on what validators and stakers want
Okay.
their base APR to be. So if they say that we shouldn't start from 9.47, but we should go a little bit down, then and we have an argumentative, objective score on this, then let's do it. But let's say if we remain with the 9.47%, and then there is no demand for the ecosystem growth and there is no demand for the growth dividend, you uh, you already are down at 5.68.
Okay.
That's like out of those two things.
Okay. So this annual emission target, so 9.47%, 47. It's the maximum, as we just said, uh, which is high versus many other L1s. That's also a question asked by the community. So, how did you decide this number? And also, don't you think in a communication and marketing aspect, when you release this digit 9.47, didn't you expect this reaction from the community, as the number is very high compared to the other L1s, and it looks like a big dilution to come for the community?
Yes, we knew that this number is risky. Definitely, we knew this number is risky, and then that it will yield a lot of discussions. It is great that it yielded a lot of discussion. Why did we come with this number? Because let's say if you have this percentage, then the staking APR at around 70%, it is still above 6%, which is pretty good, or even more. I have to make some number calculations, but it's around 6% right now. It would be around 6 and something percent. So you put up a target, a staking ratios target, which let's say you put it at 70%, and then you want to have around that still a good yield for everybody, because that if you have a higher staking ratio, it means that the liquidity on the checks is smaller, so any kind of buy pressure added there draws grows the price of the token more. And also it is a good indicator for everybody out there looking into the ecosystem that, okay, if that amount of if the staking ratio goes up, that's a good indicator that there is interest in the chain.
Okay, let's speak about this percentage related to the staking. Other blockchains have much lower staking returns, yet they have no trouble in attracting and retaining validators and encouraging their holders to stake. So it depends mainly on the liquid staking ecosystem on the chain. So don't you think this high return on the staking will be just selling pressure, and it will not solve the problem of MultiversX?
Like, it is a little bit counterintuitive, but when we had an even bigger APRs, the staking ratio was growing. And then when, for example, last this year in August, um, the the inflation dropped, and because of that, the APRs dropped. We have seen quite a few, let's say, it's not about staking providers, but we've seen people leaving because the APRs were dropping,
Are
and
you
not
sure they left because of the APR? Sincerely, do you think it's the reason why people are leaving MultiversX?
no,
Uh,
it's not the only reason. The price is the other reason as well. So that's a double thing, double-edged thing. So it's not one thing. So don't take on that. But that's what's the let's say the market showed. And again, if you have a good APR and then you can use it effectively in DeFi to generate even more, you will continuously use those funds to recirculate in the system to grow your base more and more. As an investor, you will not sell it out. So it has to go. So this all works when price is moving into the right direction. That's why one of the KPIs is price moving into the right direction. So it is a complex thing to model, and yes, it is a risky thing to do, in which you say, okay, higher APRs, and then the first thing would be people saying that, okay, this can be, let's say, create much more selling pressure. In some sense, yes. In other senses, if you see a good APR here and the price is going slowly up, then you have no reason to sell, and you will reinvest every kind of reinvest every kind of assets back into the system because you have a big growing APR.
Okay. I think, and I think you will agree with me. Price is important, returns are important, but reputation and trust is very important in the Web3, and especially for newcomers. When they are looking their next token to be added to their wallet, they want to invest in a blockchain with a good reputation, with a good marketing, with a good communication, with a community that is trusting the team. So dropping the hard cap breaks the original scarcity promise that brought a lot of long-term holders. I remember they will never be more than 31.4 million token. So how do you guys plan to rebuild trust with the community in this regard? Yeah. So what's
So
your
how you build trust? In some things, let's say in coding and in development, I think that trust is built up by us continuously releasing things and building supernova, building ZKs, building frameworks, building SDKs, and having all those solutions out there in order to developers to enjoy creating applications super cheaply. Trust is you build by showing, and then when we have, let's say, new applications or the old applications which work, which are great, which have features which are not existing on other chains, then you are in a good place. I think that one of the issues the community has is, let's say, the transparency around how the money or how the tokens are spent for development by foundation. And in this governance document, it is seen that, okay, we have to go and be fully transparent on the things with quarterly reports, for example, for everything which is happening. So that's how you build up trust. I can say to you, like, we are here in Romania, mostly developing from Eastern Europe. So let's say the salaries of each of the person in the office is smaller than any kind of mid salary in Germany, or let's say just a super good example. uh, like, let's say even my salary is much smaller than I was offered like 8 years ago in Germany in a corporation where I wouldn't have to work 12 hours a day. So that's and it's like half of it or something like that. Those are the salaries our developers are working and are pushing their days and nights out, and you can see that on GitHub. And again, we understood that code is not everything. Still, we believe that code and technology drives humanity forward and drives blockchain forward, plus some incentives put in nicely in, it can resurrect the chain into, and it can, let's say, fuel this kind of growth engine. So that's what I can say about trust. And
Mm,
like, one of, let's say, the most maddening thing it is when I read some of the posts, like saying that we are grifters or scammers or everything else. And let's say I see the salaries of the people, and I see what is what's happening on Web3 or what is happening on not even Web3, but on corporations. And I see how passionate our developers are about creating a bunch of crazy and good things and how performant they are. Also, I just love how some of the projects on the chain are building relentlessly. And that is, again, given trust because they know that the team is building relentlessly. So they are building relentlessly on creating applications.
I think the majority of the community, me included, uh, has never said that you guys are not working, and especially the the code part. But it's always interesting to listen to you. Just a personal question: have you ever thought about giving up and going to work somewhere else, with all the critics, the insults sometimes, and sometimes we can even talk about um, ingratitude, in a way.
Uh, no, but why would I say no? It starts from the belief in God and in Jesus in some sense, in totally. So I don't want to be too biblical on this, but uh, it is like actually praying and asking God for help and in direction, whether this is the good direction to do it or not. And personally, I feel that this is the good direction in order to build this kind of technology with the primitives we envisioned and still believing on those primitives that those will change the world. So that's my 2 cents on this.
Okay,
I
perfect.
actually like I was offered like my biggest offer was last year for movement to be the CTO in movement, and that was the US company. It was before the raise. It was a tons of tokens and like salary, let's say 10x, but it just like even in my it didn't stay in my mind more than 2 minutes. This kind of thing. And that's the
Okay.
reality, and we totally agree that the price is not going in the direction the community wants or we want. I don't want to see the price at $40. Definitely not anyone in the um, in the foundation or in the development wants to see these things. How I deal with let's say the fads and stuff like that. I started to mute people and I started to mute things and I have my Twitter feed clean, and also I just spend 30 minutes on Twitter. Even in these days, all those replies I am giving a super hard cap in time to do the replies, and if I couldn't do those replies, then I will do it tomorrow.
So let's speak about the US labs. So you've said US labs receives a stable coin. It will not be a minted EGLD after funding approval. And 50% that goes to open market buybacks. So why 50%? What will be the rules? TWAP bans, blackout periods, I don't know. And how it will prevent from front running and manipulation. And for the other 50%, like getaways, integration, US go to market, and so on, do you have any like target that you can mention to measure the return on investment?
Oh, return on investment, it's really hard. You can just extrapolate from the data you have on the others um, in general. So the buybacks and all those things, I am not a lawyer on this, so I don't know the whole information. You can ask, and then like the community I saw that asks, so more information is being prepared to be released on how these things happen, because especially in the US this is heavily regulated in a good way. So why the buyback? Because the buyback ensures that some tokens remain, those tokens remain for further investment, for example, when the price grows. So you always have like this thing. And then for the other 50%, like especially Danny Sharp has already lined up a few of the integrations um, with contracts prepared, which just needs the funds to be signed, and then they are done deal. And the thing is that what let's say people don't get, it's how much things cost in Web3, especially big integrations. And it is not in terms of code, because we can code it, or every kind of integration, let's say, can be done by a few lines of code. It's about the price, and that's how things are done. Getting into checks is in the millions, are in millions, custodians are in millions, stables are in tens of millions, and those are just, you sign the deal, you get on a website, you get the marketing, but you don't get liquidity by design in. It's just so. Those are the things. How you measure it? You measure it by how people are, let's say, using it. But in order to, let's say, you want to ensure that you have native stablecoin, it's not only that you make the deal with a stablecoin, but you make a deal with a liquidity provider as well, which brings in liquidity and deploys it into DeFi on the chain. So those are how complex deals are made. That's how you can ensure that, okay, I have, let's say, native stablecoin, and then I just say out a number, 50 million dollars in liquidity deployed into the DeFi on the chain, in lending, in liquidity pools with EGLD or staked EGLD, and then you have a complex deal around it.
Okay, maybe there is a point also with the critics slash accusation from Justin Bonds. So you made a post about it a few minutes ago, and Lucian also wanted to reply to make things clear, to make things true, because it's the way that you wrote the proposal. So can you, for those who are listening, explain what is this let me just check a bit. So this MVX Labs US LLC, so who owns and runs it? What will happen at the $35 milestone? And yeah, if the mint occurs, what will be held by the company? So yeah, explain a bit to be sure everybody understands what's your strategy with this US company.
So the US company will need a US president for that. So a new person to be hired and to run the LLC completely. Uh, the crossing is not only like the crossing; it has to it are these are multitude of things. First of all, there is
Just sorry, but being a CEO doesn't mean to run and to own the company. So let me rephrase: who will run? So a new president to be hired. Benjamin announced it in September last year. But who will own the company. It will be the foundation. It will be the MultiversX Labs company.
Technically, I don't have this information, so I don't know in this. Probably Lucian and Benjamin will give more information around that. But about the crossing of 35, it is not only crossing. So we don't have, let's say, mint keys on the chain. Somebody said that in the post. It's not going to happen like that. So it's like this period of discussions, then governance goes through. If it is voted, then it has to be coded, and after the code will come only after supernova. Validators will have to upgrade. The code will ensure that it is open sourced. It gets into a contract which is unmodifiable, and lada in order to create trust. And we can add as many guardrails as we can code into in order to have trust. And that's
You say the $35 and the $50, it will not be coded.
it
The
will be
mi-
coded how much is the maximum number of EGLD which is can be minted.
but the milestones, the target, the price target,
Yeah,
will
but
code.
yeah, but you calculated from that how much e-gold can be at maximum minted.
Okay.
But let's say this everything goes through and the price is above $50 already because we have a bull run, or let's say you will not make the mint at 35. You will make a mint at around that come on dollars, and the VCs will get in that price range. So it's not like at that point. And again, the mint means that those tokens are locked for 3 years, and
Okay.
the locked tokens are sent to VCs, but
Okay.
those are locked on chain, locked, smart contract,
Okay.
open,
This
verifiable,
is clear. So what?
verifiable, tagged, whatever you like.
Okay.
and whatever the community likes in this sense, it can be added. That's why I said.
Okay. So the tokens will be minted. They will be sent to the VCs against money. Okay. The money will be in stable coins. And
Most
so this,
probably, yeah.
or maybe in cash. I don't know.
That's the VC deals.
Okay. And so this money, this millions of dollars, will go directly to this US company.
Yes. And the US company, as it is said, it has to have full transparency of terms and milestones, and it has to have like a clear roadmap of what integration it wants to do. Integration X, Y, Z. For example, custodian, bridging solution, let's say payment solutions in the US, marketing, whatever. And then it has to execute on those. That's what you need to do. And uh, on that, the transparency reports can be done.
Because what I understood first is that you will create the first EGLD DAT yourself. And so people will come and buy shares from this company on the stocks. This is what I understood first when
Okay.
I heard. And I am not the only one. So that's why I give you the opportunity, because when I thought this, I told myself, guys, because I found a discussion saying on a telegram from someone from your team saying, okay, uh, other companies are not buying EGLD for their treasury, so we will do it ourselves, and maybe people will be interested in buying stocks from this company like MicroStrategy did. This is something I read, and I am not the only one. So can you make it uh, clear about your strategy in this regard? Because when I hear this, I just think about all the things that you build because nobody was building it.
What?
All. X exchange and so on. You build it because nobody was building it. This is I think the main issue in MultiversX, confusing the protocol layer and the application layer. And in this regard, when I understood, but maybe I was wrong, so that's why I want you to explain that you were about to build this first digital asset treasury company in EGLD, and you are the foundation, so there is a problem. I think this company should come from the private, the exterior, and the independent company. So can you explain and maybe clarify this thing?
That's what is my understanding as well, that both the DAT and the ETF by regulations will be run by outside companies, not foundation at all. And then they have by the rules they have a scope. The scope is, for example, the DAT to raise money on capital markets and to gradually buy even more supply from the EGLD. That's what they have to do. And from my understanding, I don't know the whole regulations around DAT. That's how they work. And then that's how the, let's say, the SEC, if I remember correctly, operates and verifies them. And uh, it is they have to be pretty open and pretty public around everything they did. That's why MicroStrategy is launching all those reports when he is buying the Bitcoin in, and it is not the foundation who runs those things. I think somewhere it is written that uh, the deployments of this is with due diligence of counterparties and with counterparties. So, and binding contracts to be reviewed by both ecosystem representatives and the legal entities who will run the DAT and the ETF.
Uh,
So,
does Costi Pirou part of the team?
I think, yeah.
Sorry to ask, but like, look, uh, we found this uh, on Telegram. It's public, and in this post, people are asking about this company, and he says that it follows the same scope and provides exposure to EGLD for large investors who otherwise lacks access. So we are talking about institutions that can't maybe buy EGLD directly on Binance and wants to expose to
Yeah,
buy
that's
EGLD.
true for ETF and DAT as well,
And
because
so
that's how the regulation is. They cannot
absolutely, they don't have the right to invest in cryptocurrency directly, so they buy shares of DAT to expose themselves to companies. So this is what is DAT, and it's fine. So at the end of this, it says what I meant is that we don't wait and hope others will create this for us. The foundation kickstarts the first one, and let me share just the second part of the message. When he says, as per my understanding, they've already completed all the preliminary steps, talks with governmental and so on. So as for now, it looks like the reins are handled over the third party and the work is done by the foundation plus the new US team. So can you clarify this? Because maybe it's a mistake, but it was written by a member from your team. And I think it's interesting
uh,
to have
uh,
your position
from
about that.
okay. So we had, I think, 2 weeks ago, we were at in for those 2 long days of discussions in the leads. You have seen some of the videos or photos around that, and there it was discussed that for the DAT, you have a partner, and the partner does everything. It's not the foundation who does it, the partner does it. So you have, like, you as a foundation, you have to go into the US, search for a partner who would like to run a DAT, make all the preparations with the partner, and you have to uh, verify those counterparties whether they will do as they say, and then it's their job to do it according to publicly signed, legally binding documents. So you are not giving out, let's say, locked tokens to a DAT if, I don't know, it is run by X and he's not doing what he's supposed to do. But again, from my understanding, it is not that the foundation does, but it does, let's say, through a counterparty, a third party, and it is an publicly signed legal document that the that party, the counterparty, let's say, owns the locked tokens so that he can start the process of uh, borrowing from the capital markets and buying more EGLD. So it has to be a totally different kind of person. It cannot be run by Benjamin Lucian or Dani. It has to be a DAT specialist from the US to run this. If
So
it
what?
if it answers my question. If
Yes, it does, because it, in my opinion, it would be a bad thing, definitely. And yeah, so you confirm that Kosti Pirvu maybe was not very attentive during this team building. No, you know what? I'm sorry.
it is the economics is so huge that teams internally miss the few things there. So it's okay for everybody on the Twitter to miss things.
Mm, yeah, but it's not on Twitter. It's a
Oh,
member
it's
of the
Telegram, Twitter. It's okay.
team. Okay, but I think it was necessary to clarify this thing. So these DAT will not be run by the foundation, will not be kickstarted by the foundation. It will be a third party partner. Can you tell us more about this partner?
No, you have to ask Dani Sherb or Lucian on this.
Unfortunately, I'm not in touch with them.
Like I cannot do like a good team is a good team when everybody has his own job to do, and then we together and make a decision around the all the gathered information. But let's leave us at the code and at the mathematical stuff.
Yeah. Normally, Benjamin should do an interview for the French community in the next days. I have the information, but I will let them announce it, of course. Okay. Let's move to the next topic. Just give me a second. Yeah, there is a point that is very important to me. You already launched some like growth budget, growth campaigns, grant campaigns, Launchpad, and so on. So you with X Launchpad, it was about $20 million that was raised for 10 companies, 10 projects. You have the 1.5 million grant program growth game with 1.5 million with the TRBE marketing thing. You have $1 million grant program for Sovereign Chain. This is money. Okay, so you have money, you put money on the table to attract builders and so on. 5 years after the mainnet, the results are not great. Let's say it. So, why this time, this inflation, this budget, and so on will make things different? Because the team is the same, the biz dev manager, developer, and so on is the same. Everything is the same on MultiversX except two things. Uh, except Supernova and the upgrade and the tech. But you said before, technology is not everything. But I will finish my question and give you the time to answer. So everything is pretty much the same in terms of strategy and leadership and so on, except two things. So the USA, okay, but USA is opportunity, but it's also like a big sea with big sharks on which you're small. And the second thing is the technology. Of course, transaction will be faster, and I think it's a big thing. So I will sum up my question. Why the money you will grab from this new economic model will give different results that the previous millions that you put in the table to attract and retain builders on the chain.
Because we have to be more targeted and learning in the last 4 or 5 years to define what does really matter and what are the projects which really matter and attract revenue and attract capital and starts to move the chain into the right direction. So you are constantly learning about these things and you constantly re-evaluating these things. And as I said, if the KPIs are not met, then money is not given out. So yes, there are some, let's say, there are some of the funds out there, but we have to, let's say, um, fuel even all the developers who are on the chain right now to think, to get out from the European mindset of thinking and start thinking with the with the US mindset around growth, because we see a lot of good intention in the, let's say, in the growth grants, but a bunch of those projects are not like, they make the projects and they don't have a revenue model at all, and all they will do is every 6 months or every 1 year they will ask for more grants to continue their operations. So that's one of the things. It's one of the things that we have learned, that okay, if you build on the chain, we have to um, builders have to build in such a way to generate revenue for themselves, because otherwise they will just go from grant to grant. We learn about these things. And yes, we had some, okay, all those things were in a form of 5 years. Some of them went really well, some of them didn't went very well, but we have a bunch of applications on the chain which are usable and good. And let's say a lot of the competition which started in 2020 have died, and we are still surviving and kicking, and not so well. We would like to be there in the top 20 to say that we are well and we are good and we are great. Um, Again, it has to be a mindset change for everybody, not only for us, but all the European builders. I know it is hard to get out from the Europe, especially to get out from Eastern Europe about this. But again, more we have to be more sharp around creating, for example, for the revenue. Now, just for example, those numbers you have put out there are pennies compared to how much, let's say, Solana or Sui have injected in their ecosystem. Sui only on their first year, they injected $400 million in their ecosystem towards various startups, out of which 90,
400 million.
yeah,
This
out,
is this is the money they raised.
yeah, they raise that amount of money, but again, they control how big portion of their tokens. So from the tokens they can give out through various forms and through lock tokens
Do you have
and through
source about this 400 million in grant and subvention and subsidies in the ecosystem for the first year? Do you have? It looks to me very big. Do you have source?
yeah, we have a bunch of source for that. I'm not. This is not for
No,
an
no, I'm
attack.
not saying it's good or bad.
No, this is not an attack
I
for
just want
Sui.
to
I
be
just
sure if
said
it's
out.
true because 400 million looks really a lot of money.
Yeah, you can go around and you can search for this information, but it's possible. But it's not million in USD. It is token value which goes up and down, and they raised 400 million, but how much big of their um, how much tokens they own. So the number of tokens they own is much
Take,
bigger, so they
yeah,
can give you from that.
you take the amount now that the token is at $3 or $4, or at the moment that they gave the token.
Uh, this is this is like an aggregate on all those things.
Okay, let's be sure to check what is said. But anyway, it's
I just set out a number, and you can already look and in any kind of other ecosystem how much, let's say, the grants were in general.
you
You
know what,
can look at
I have
consensus what they
I
did
have
in
an
Ethereum
example,
for.
and I have an example that I know
I
very
think
well.
that consensus already poured billions into Ethereum,
Yes,
which is okay.
but let's
What I wanted to say that the other ecosystems are at much higher in terms of grants, and even, let's say, how much of those are succeeding or not. It's a percentage in the startup world, like 1 out of 10 in general in the startup world succeed. And then in SUI, you can look around how many of the teams have received grants from SUI, and for example, how much of them have a working product. This can be verified on Solana and on others as well. A little bit harder because you have to dig into Twitter, but somewhat doable.
So the grant strategy is interesting. I know an example. Hedera, the blockchain Hedera, they gave around $250 million in grant in any way to attract builders on the blockchain. Well, it's a special blockchain. It's permissioned and so on. But anyway, nothing happened. Okay. So on Solana, for example, today, if you want to grab a grant, you have to pass different forms. You have to give some KPIs, and you will not have millions. You will have some thousands of dollars. This is the new meta in terms of grant, and it evolved these years. So what I want to say, it's not just about money. Even when you have hundreds of millions of dollars, you can fail, and with a few thousands of dollars, you can attract, you can build, you can gather builders. Let's speak about Colosseum on Solana. It will happen next in the next weeks. For example, builders are not attending for the money. They're attending because they want to gather. And I can see it in France, for example, with Support Team. They opened an office on which builders can come and build all together. And it's not about thousands of millions. So my point is, money is important. Of course, you cannot do anything if you don't have money, but money is not everything. So that's why my question is, above all the millions of dollars that we are talking about, what did you learn? Of course, I would have loved to ask the question to Daniel Serb, but I will ask you. Sorry, you are the only one I have under my hand. What did you learn these last years that will make this money more useful to attract and retain builders?
It has to be a much bigger alignment between the community, between the ecosystem and the builder. So an alignment through KPIs and an alignment through what matters to be built. For example, perp dex, which brings up, let's say, tons of
This
revenue
is
on
perfect.
chain.
Sorry to interrupt. This is perfect because we have the question what from Adrian Tiberiu. What kind of builders do you want to attract, and do you want them to build specific projects? So that's the perfect time for you. What you talked about perp decks definitely. What other kind of maybe prediction market stuff? What are the thing that you really want to attract and to be built on the blockchain?
Yeah, that's why I said that you have to be much more targeted with the money and the alignment between builders. And again, we are playing the same playbook, let's say how Solana does with the growth grant games, which is milestone based. So you don't get a bunch, as I said before, in one stuff, but you have to get into KPIs, you have to get to the next milestone, you have to get into the next level in order to receive more and more grants. But again, what we have learned, let's say in the last year or last 2 years, that you have to inject capital mostly on those applications or those builders who definitely target revenue generating applications and to generate and those builders who are actually targeting applications which, let's say, really matter and are great for the ecosystem. Those are, you said, prediction markets, one thing, perp dex, another thing, because it can drive back a lot of revenue. Then, as in the document shared, uh, it is a catalog of DeFi strategies. I want to attract those kind of builders to create different kind of DeFi strategies on chain. Maybe even the on chain micro strategy can exist. There is actually not a proof of concept, but a series of ideas and how that could work on chain. Those are the builders we want to attract. And one thing is about, let's say, money, which especially in DeFi you miss, is that you can build the best product if you don't have the liquidity. The best product with thousands of dollars in liquidity doesn't mean a thing. You have to have the best product plus millions of dollars in liquidity on that product for the product to somehow work. So that's what we especially want and especially target. But these, so it is not limited to this, but for any builder who wants to build, it has to be aligned with a set of KPIs, and the builder has to demonstrate that revenue generation will happen.
Okay, thank you, Robert. So NDAs are fine, but total opacity loses support. So we have another question. Hello, Robert. Are there any agreements, at least verbal, with VCs or investors? Um,
Yes and yes.
okay. Um, so we're coming to the end of this interview, let's say. I wanted to make it not too technical, but I wanted to make the most asked question answered and clarified. So guys from the community, if you have any more question, feel free to ask it on the chat. And yeah, maybe Robert, what's your feeling about what is happening on MultiversX? Do you think you are winning more than you're losing with this sequence in terms of support from the community?
I think that if we didn't do anything, we would lose even more. So definitely, like let's say if we would have developed only supernova and not be direct with these things, we would have lost even more support. And let's say maybe in the when the bull run starts, the price move would have moved a little bit. But if you don't have uh, targeted capital injection towards what matters, then it would have you wouldn't make a dent, you wouldn't make a difference. You know, in 2020 and 2021, we made some good bets and some good things which uh, uh, pushed us from a constant 190-ish place to the top 20, and that was Mayar, X Exchange, and some of the other things. So uh, if you do not make changes, if you don't, if you are not targeted towards extra carefully towards things, then you are one amongst the 10 other fast chains, let's say it out in this sense. And then the fight is hard. uh, so I think that even if it is hardcore, even if it is this, all this thing is, it's let's say it is stressful, we have to discuss a lot with the community, it has it has risk. I am super positive that everything can work out, and I'm super positive that we can add all those guardrails in the chain, in the contracts, in the governance, and everything, that things will not be worse than they are now at all. So always a guardrail here and there and everywhere.
Okay. Two questions from the comment. Fast question: are you still working with Alex Tabarok for the tokenomics part?
Yes.
Good. We just linked to something.
No, not leaked, but again, it's yes.
Okay. Have you heard about Digital Gold Fund?
I've read the tweet and the invitation, so I don't know yet. Probably somebody from the US will verify, and then we will know more.
But you're not in touch with them yet.
I just saw that I was tagged by them, and some of the US guys, I think Marcus and some others, have DM'd me on Twitter that we should look into them, whether to go into the podcast or not. So that's I am so full of the economics that I didn't have time. So if somebody makes a good verification and sends it, it is I am happy.
Okay. What is the time frame when it is approved?
So if everything goes perfectly, then let's say somewhere next week we start the governance process, which takes 10 days. So let's say middle of next week we start, it takes 10 days. That's almost 25th of October when the governance is finished. Then the whole focus of the development team is supernova and supernova and supernova. So it will have battle of nodes and everything through the whole November, and we plan the launch of supernova before Christmas. So whatever happens in economics, I say early next year. Because like if I start to code and the testing and everything has to go in parallel to supernova, it's not good. It's you cannot have consensus changes and economics changes in the same release. It doesn't work. It's too complicated, too many ifs and else's, too many test cases to write. So if it is voted, then start of the next year when it is, let's say, activated. But if it is voted, then all the things around DAT, ETF, and investments can go in parallel, because you have a proof that those things can start to work in a short period of time.
Okay. And why uh, proposing the vote before supernova and not just releasing supernova, make it work, and after going to the economic upgrade thing?
Because you need to code it as well.
Yes.
So there is zero code for this in the economics.
Yes,
So
but
so you have the proposal, you have we said that we are not going to vote any lines of code when it comes to economics
Mm-hmm.
if the governance it doesn't go through. So we have to have, so if we want to get into coding, first governance, and then we start to code. And because this is the time frame of coding, testing, releasing, auditing, releasing, so we wanted these things to be aligned, that if everything goes well, then in a short time frame after supernova it can be launched in order to be in line with the bull market.
Thank you very much, Robert, for taking the time to come and answer all of my questions and the ones of the community. I think Lucas wants you to go back to work now, so I will release you.
Thank
Um,
you.
let's have another interview in a few weeks. I would like to talk about the next steps of MultiversX, because MultiversX official account made a thread about all the next development after Supernova. And for those who are following MultiversX, it's not just about economics. It's not just about token. It's it's also about technology and what you will do, how you will innovate to take more market share in this. Um, Thank you very much,
Yes.
Robert. Have
Thank
a
you for the
good day.
questions. It was a good to be here. And now back to writing.
Take care. Thank you, Robert.
Bye.
Bye. Well, this interview is over. I hope you enjoyed. I hope you had your questions answered. I hope now things are a bit clearer for you. Uh, the question is not whether you approve or you don't. You can vote for this. The goal of this interview was to ask the real question in a kind way, no insults, no scam, no accusation. And in this interview, some questions were answered, some things were clarified. I hope it will help you vote in knowledge. Thank you very much for following this. You can support us by liking, subscribing, commenting, and sharing the video, but also financially by sending some EGLD on the GM Web3 wallet. Thank you very much, and see you very soon for a new GM Web3. Bye bye.